following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Let's take a look at the S&Ps here. And getting a little bit of a bump this morning off the lows. Reached at 2108.50 pretty much to the tick on Thursday. And now we've almost explored the entire fair auction on Friday in reverse. So let's just look at some numbers. 2143, the high on Friday, and we're trading about 2126 right now. So didn't exactly fall off the cliff on the daily there, but on the weekly we've definitely done some technical damage here. So really looking again, reached a little bit higher, and I want to point this out. Here's the big number to pay attention to, 2134 today. The rally on Friday getting back above 2139.50. That was a little bit too rich for my blood. We talked about a DMZ between 34 and 39. I got stopped out and just tried to get back in the trade, turn the rents the same way when we reversed there. But that's the way the ball bounces sometimes. Sometimes you got to take the medicine and just stay with the game plan and where the edge is long term. So again, got a little bit too rich for my blood on the upside, but it was nice to see that thing get back down below and try it again. Let's take a look at a couple other instruments we need to pay attention to here. November crude. Let me get my month right here down below. As we look at this, I've been a big fan of this one, trying to stay below 50, but we talked about trying it again on Friday. 51.22 was that number we talked about. Trying it again from the short side, it reached a high of 51.14, so 8 cents from that. Pretty much got right into the neighborhood there, which was nice to see and nice to pick a battle around that general area. What do you do with crude now? It's kind of disturbing that we have closed above 50 and kind of retraced down into that number. Low of 49.94. The top of the profile is 49.75. So spinning around here, I'm just waiting to put on some bigger shorts, getting at least a daily close below 50 and looking at crude from the short side at that stage. Don't see a lot of big reasons to get long crude in any large way right now. So again, trying to lean on the short side. This is something Joey and I were speaking about gold. This is December gold, getting below 1252. I know he's a little bit more short-minded than long, and that technical damage below 1296, big deal. But crowding this area down here, I think he's going to kind of have his wishes happen. 1252 is the big number there. A daily close below there. We talked about just being patient and waiting for that to happen, and then the retracement back up. So that's still kind of a wait and see, really. That's the big inflection point down south. The notes, man, I don't understand how these things really always seem to hang in there. And it is what it is. 129.22 had a new daily profile appear Friday. Again, kind of visiting that down below 129.22 lows today and bouncing off of it. Again, I'm seeing this as an opportunity to explore the entire fair auction up into 130.14 on the 10-year. Dollar, no change in temperament on this one. Here's the weekly past the 97.16 area. Had a weekly close above there. This is the daily. Obviously, this is something we were just really counting on. And on the long term, there's really no reason to take this off at this stage. Here's your kind of trailing stop situation, 97.65 on the 240s down below on the dollar. But again, that's a buy support area on a short term. You don't want to be shorting this, in my opinion. November beans. This is the drill and the daily here. So having a little bit of move up today, but again, 964, that was an area to kind of base some trades around before. Now you've got to sit tight on this one. 983 is the next kind of sell resistance area. Again, you got 964, 944 on November beans. I don't really see any reason to not short this when it presents itself as far as resistance and breakdowns. Spinning around the globe here, let's just take a look at the Shanghai. Coming off today already in the Chinese markets, but I think we're coming down into support. I like this trade from the long side still. 30.55 is going to be the trigger on the index itself. And I think we're covered there. Let's take a look at silver really quick. Kind of similarly acting with gold here. It's just a very similar chart as far as gold. 1738 closes below there, rallies up in 18, 17, 18. Up top on silver, it's kind of a do nothing right now, in my opinion. Doesn't look very attractive from the long side. I'll admit that. Spine kind of got broke on both of these products. Silver getting below 1861 the other day. Copper kind of languishing down here. The 214.05 area, remember, had a weekly close last week below that profile. So that's going to be a little bit of a resistance area. 214.05 now on copper. Not exactly excited about getting long that until we have a close back above 214.05. So right now it's sell the resistance. On the financials, and got a couple of stocks to go through today as far as financials go. Didn't act terribly bad, but let's take a look at some internals. Our buddy Wells Fargo here. I think this is going to be the eternal short for a while. Again, got back up into that 45.31 Friday and then sold off. I think 43.74 and lower is a foregone conclusion on this one. JP Morgan. Let's wait for our charts to come up here. Again, you got to buy the strong stocks in a sector that are showing themselves. Let's see if we're printing this morning. 67.40, so just coming down into support on this on the weekly and daily. And let's take a look at Bank of America. We're going to hit this when we come back from break, folks. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Excuse me. Trying to get something pushed out here, a new version on the scanner, and just fix a couple of things, and having a couple of issues here. Strong downtrend. A lot of stocks, I'm showing the scanner right now, a lot of stocks really kind of dumped themselves into this phase and going to downtrend itself. Just quite a few stocks on this list now in defined kind of profile downtrends. And I'm looking at the breadth here. That's why I'm really, really interested, going back to the S&Ps and selling this 2134 area. So as I go to the S&Ps, let's see where we're at this morning, 2126. So if we can get back up into 2133, 34, that's going to be a very cool scene. Remember, we had a weekly close last week below 2133. Here's the way that looks. And again, very interested in whacking that right there. Long-term inflection points, decent leverage, the whole 9 yards. Let me pull up the den here. Okay. All right. Taking a look at the British pound. This is the new 120.41 down below, 124.97 up top. Kind of in no man's land on the intermediate here. Going to have to wait until we at least reach one of those inflection points for a little bit of a more leveraged trade as far as being able to pick a battle on more important inflection points. Here's the 240s. Just looks like we want to just fall off the cliff again, and kind of crowding lower highs, just kind of compressing down into these areas. So that would be 120.41 will be a chance for a little bit of a trade and bounce at that point. But remember, long-term trend is down. That's kind of a contra trade. The old euro. All right, so big week last week. I don't have to tell you guys this. The dollar screaming north. This is a little bit of an inversely related situation. 111.43.44 finally broke. And right now we're trading 109.92. So again, the 109 neighborhood down below, I think, is very much in order. Here's the daily. No real reasons to take this trade off right now from the short side. Here's the 240s. Maximum selling point on this one will be 110.26 up top. That will be exploring the entire 240 fair auction for that battle point up top. Aussie dollar, love this trade from the long side. Really kind of been the easier trade to block out the short side. And I think you can base some stops below 75.87 right now. And the yen. So the yen has been something we've been talking about, blocking out the short side. This is a really massive stake in the ground last week, getting above 103.52. That's going to be your back the truck up buy support area. Yes, I said it. Back the truck up. We've reached the low of 103.93. This 103.50, 152 down below. This is going to be just incredibly attractive support. Pretty much reached that on Friday, but I think it needs to be defended one more time, so don't get carried away and find areas that you can't really play defense. Here's the 240s, 103.98. Let's just call it 104, but again, that more attractive situation would be 103.52. All right, let's go back to our other terminal here. Somebody in the den saying they love that term, back the truck up. That can be a dangerous term, though. It's difficult to, sometimes we talk about this a lot. It's difficult to not see things sometimes and try to act on them, looking at these screens a little more often than possibly we should. A lot of times it's just easier to kind of, okay, this is the long-term view. This is the way I look at it. Here's the long-term inflection points. Kind of walk away from this thing every once in a while and just kind of put your orders in, and you've done all your homework, and sometimes the noise can affect things in your mind. But sometimes the back the truck up is in order. Let's take a look at Netflix. Yes, and putting stops in is just a part of this game. It is what it is. Here's Netflix. Some folks courting these people, of course. Here's, 96.18. I was kind of a big fan of shorting this if we can get back down below that area. And not a lot of leverage to trade it right now. Let's take a look at McDonald's. Seems like they're clearing out all the, and we've had this on our short list for a while, clearing out all the management. This has been kind of a slow bleed here. It's been a nice, easy situation as far as being able to recognize what's been a short opportunity relative to the rest of the stocks in the S&P. 115.42 was kind of touched last week. That kind of, go back and retrace and hit it. So, again, I think we can experience more downside here. We're trading, looks like 114 pre-market. So again, if you're trading this, even on a day trading level, you got 113.23 to pay attention to here, but I think we can actually go much lower. Twitter. And we didn't even get a retracement back up into this 1890 area, which I was just hoping last week that we could experience that and then just be able to just hit it with stops, of course. And that would have been a nice trade. 1498, 15 down below. That's going to be your next stop on Twitter. It's just amazing. Where does this stock come from? Let's just go back in time here. Yeah. So that's the long-term view on it. I don't think I have anything past there, but it's just amazing. You would think Trump alone would have just single-handedly caused this thing to rise. Caterpillar. Okay. Not printing yet this morning. Kind of an amazing situation. I'd like to see a retracement back into 84.73. That'd be the only way to play with this now. Would love to see that. Anything else I'm just kind of ignoring on that stock. Let's take a look at ExxonMobil. All right, so this one, we talked about 88.66 will be resistance on it. It really hit that last week and reached the targets down below 85.12. Looks like this morning, if that's a real print, 86.28. So kind of getting back down towards the bottom of the profile there. And we're going to talk about this a little bit more when we come back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Just waiting for server to reboot here. Here we go. Let's take a look at Apple. And this one's kind of become pretty interesting. I know this is a little bit more of a daring trade. But considering, I mean, this is a long-term view here. Last week we just started at the top of the profile, 114.82, never really looked back, but I like this actually at this stage. I like the S&P situation. The breadth negative might climb a little bit more, but this is kind of, again, 118.08, top of the profile here, could revisit easily 115.66 and even that 114 and some change number. So a little bit more of a daring trade. I like how this could explore the entire fair auction on the daily down below. Not a big range, but with a little bit of market help, I think we could relax here a little bit and head south on Apple. Again, there's probably better shorts out there than this, but I think you could have a little bit of edge here on Apple. Let's take a look at Tesla. Tesla watch. Here we go. Panda watch. All right, so as we wait for this to come up, so here we go. All right, so where does this thing head now? Supposedly Musk has got some new... I wonder if people are going to get hip to like the new idea meal at some point. Seems like they are. 201.16, that definitely was a place to play defense last week as we got down below there. Little bit of a pop this morning off the new idea mill stuff coming out. But again, I think it's just a chance to get short again on Tesla. Disney. This has kind of been the similar scene as McDonald's. We've been talking about this when we had the stake in the ground closed below 92 last week. This is our weekly. And again, don't see a lot of good news out there for this one. With a little bit more market help, we could shatter and get below 90 on this particular stock. Let's go into the scanner really quick. And what I want to do here is go into breakdowns. Quite a few stocks getting some momentum on the breakdown scene on the intermediate, the long term. Some of these stocks are already sitting in a bad state. Let's take a look at Alcoa. Whew. And 2746 had a massive stake in the ground on the long-term technicals. So 2746 is going to be resistance on Alcoa now. Up a little bit this morning, 2656. So 2746 will be resistance here. Let's go into downtrend here for a second. Darden restaurants, if you guys have been reading any of the news, a lot of these restaurants are starting to just close, not close altogether, but close stores. I think Ruby Tuesdays was saying they're going to close 100 stores. Fundamentally, I mean, you can, I think when I first started this show, I was joking about, I'm so hungry I could eat a gas station or I could eat a sandwich from a gas station. And actually, that's becoming prevalent along with this kind of home delivery, going and sitting down and spending the time more than anything else to sit down and then maybe pay more than is necessary for food. It's starting to hit the restaurant scene here. Darden restaurants, probably going to gap down this morning. The target's down below 60.24 on this. Was already on the downtrend section here. Bristol Myers BWY or BMY. Let's take a look at that one because it's been something that, again, we had the profile up here above price action. This is our long-term weekly. You guys know the story on the situation on this stock. We talked about it before fundamentally, but again, having that profile up here above price action, very bad. And then all of a sudden last week, now we're down into sub 50. It's not on sale yet. We don't have a lot of indications down below. Here's our daily. We don't have a lot of Steve Rhodes, you don't go there and eat the all you can eat unbelievably awesome salad bar at Ruby Tuesdays. Is that what you're saying? Yeah, Bristol Myers, it's not on sale. If you're short this stock, I don't think you've got any serious reasons to even take those shorts off. Here's the 240s here, kind of gave you that scenario around 50.81 on that particular time frame. But again, there's just nothing down here to play defense against if you're trying to bottom pick on Bristol Myers. And considering that, I think the market may actually finally come off in a consistent way. Bristol Myers is not in a good spot right now. All right, so a couple other stocks we're just going to kind of flow through here. General Electric. So here we go. Long-term on General Electric. Again, I was looking at 29.55 as a buy point. When you have these stocks come down into these areas and then they don't want to get away from it and you kind of start crowding it, then you start thinking, this bounce may not happen. And you got to either tighten up the stops or just get out of the trade altogether. And right now, 29.55 is a chance to play defense on this with stops above, considering that, the broad market breadth as far as profiles go might, again, drag some weak stocks down with it. And if the market rallies, some of these weak stocks may not be the best longs to be in right now, if the market happens to pop here. So again, we're trying to weigh out odds and look at things from that angle. Coca-Cola, let's take a look at that one. These are some serious stocks that are kind of in this particular frame of mind now. And the market in general being held up by some players like Apple. If Apple turns around off those daily unfair highs, and I think we've got a chance for that to happen, you could see a little bit more momentum on the downside in the market in general. And a lot of these stocks may just start throwing up that are already weak. So 42.10, we had the close blow, we had the retest last week. Again, these aren't the most exciting trades, but they're very high probability situations. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. Looking at the 30-year, don't really cover this a lot. Here's the daily situation on the 30-year. 164.02, a little bit of a bounce this morning. We talked about in the 10-year. I'm just kind of concerned about ever going short these treasuries, and it's kind of a no trade for me right now. I know you guys are catching a little bit of a bounce this morning, but daily close back above 164.02 would help me look at that as support back up into 166 actually. God knows if they'll ever raise rates, even though looks like the globe is, or not even though, in conjunction with the globe, looking like a lot of folks are determining that global expansion is over. We're stuck in the mud forever, etc. I'm sure the Yellen and her crew will pick up on that, and oh God, we got another indicator to not raise rates. Take a look at the XLE. I haven't been impressed with the way this really hasn't. I know we're sitting at the top of the profile here, 69.03. This is where we broke out before. There's that 65.95 down below. Again, expecting oil to come off here, and it's really wild how the dollar's gone straight up and oil's kind of hung in there, but still expecting oil to come off. Okay. Let's see. Going back to the scanner. Man, I'm sorry, guys. I'm trying to tell people. We had a couple little issues with the scanner this morning. I'm trying to talk to our tech guys about getting it fixed at the same time. I cannot chew gum and speak at the same time or talk to the tech guys. Here we go. We're going to go into the ETFs here and look at the XLE sector. Again, every other sector has been red here on the intermediate daily, except for this particular sector. So, if you're looking at trading oil and you're saying, oh, let's trade it from the short side, but let's try to increase the odds. You've got some instruments here that have been, and here's COG, just completely had a bad week last week. Let's look at that on the E-signal charts here really quick. So we always try to say, okay, well, we've got a certain opinion on a sector or the market in general. Let's try to increase the odds by drilling down into instruments that are already kind of raising their hand within that sector. Cabot oil, 23.98 is going to be resistance now. That was really, it was really a stock that wasn't making new highs with oil. And, again, you've got one declaring itself weak as heck here at this stage. Let's look at a couple other oil stocks here. Murphy Oil, Green across the board. Definitely not one to be playing around with. This is the play with fire symbol of the oil sector. If you're thinking oil is going to come off, SWN. I like this stock, but 1211 now is going to be support on it. Showing some weakness. Could, if oil comes off at all, we could easily see 1211 on that one. Marathon. Let's take a look at Chesapeake. Yeah, this is one I think we talked about, this profile appearing below price action. Again, this fact alone is something that's scaring me away from even looking at this from the short side. Let's take a look at a couple other oil stocks here. Phillips 66. Again, sector that's kind of still hanging in there as far as breadth, but seemingly to me, the XLE has been kind of a predictor to some degree of what might happen with oil in the past. So a lot of these oil stocks look relatively heavy. Let's take a look at rig. All right, so not the darling of the oil stock world. 1062, we kind of reached that the previous week, backed off, reached it again last week, backed off. 896 is probably going to be in order here. And with any help from oil, you easily could see that. And let's go back to oil really quick. Trading 50.41 on the November contract. Want to see this get back down below 50.49.75, and then might start having some downdrafts into 48.16. That would be first stop there. Kind of talked about on Friday 51.22, trying to do some contra trades against that. But if we can get below 50, I think we can easily see 48.16. Okay, let's take a look at Amazon. All right, so the long and strong stock. Let's see where we're at pre-market here. Looks like we're trading 820 in that general area. Here's the dailies. Again, not the stock to be shorting. I think you got to look at this as buying opportunities. Just like that, 831 was support, been broken, gapped up on Friday, started getting below profiles again. Not a good sign, but again, the long term, there's just no supply areas trying to happen on this stock on the weekly. Obviously not good for the market in general. Let's take a look at Facebook, another one. 130.14. That was kind of some targets there, and now you got support at 123.70 on this stock. That was just wild how they came out. They're cooking the books on the statistics on their things that some people base advertising on, and just didn't phase it. Amazing. Let's take a look at 3M. Somebody is then saying Amazon could possibly be a short. It's starting to show some cracks in the armor. But again, you've got better shorts out there probably. It's a little bit more of a riskier trade, but it is interesting how it's started breaking down below profiles on the daily. 3M, talked about this reaching some targets up top around 182.27, and you've got I don't know about the back the truck up, but you got a big number down below 166.87 on this stock. I think the market could easily drag it down a little bit lower. So something to put on your radar screen as far as trying to pick up 3M on sale. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show, heard daily here at TFNN.com. On Wednesday, October 19th at 5 p.m., I'll be hosting a special 1-hour event, Trading Range Boundary Lines, where I'll teach subscribers how to identify hidden support and resistance levels, the kind that you definitely need to be aware of for your trading and investing. You'll learn how to plot major horizontal support and resistance, how to identify breakouts and breakdowns, and how to project the next price move. These support and resistance levels work for stocks, ETFs, futures contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes October 19th's Trading Range Boundary webinar. Plus, if you sign up now, I'll include access to my 3 1-hour workshops, the ultimate trading signals, the ultimate reversal signals, and the long, short line that every trader needs to know. This is an investment you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. We're going to take a look at a couple of things before we get off the air here, and let me just notify our tech guys of something here about the scanner. Okay, looking at DuPont. This is our weekly on DuPont. Again, it's kind of been in a relatively tight range, been compressing. I had an email about this. Is it time to buy? Kind of volatility contracting. I think you got things better to put mental capital towards than DuPont right now. Gold kind of migrating back above 1252. Just to kind of recap here, don't like how this thing's just not really wanting to get away from these unfair lows on gold. So again, not looking at that as a buy point at this stage. The S&Ps would really like to see this thing get back into 2133, 2134 to be able to short that. Dollar, recap on that, coming off a little bit this morning. Nothing to really flinch about. Support now is 97.65 on the dollar. We've talked about crude. Just to do a couple more recaps here. November beans, 983 is going to be your next resistance area on that one. Hitting corn, hadn't hit this in a while. We're right there, folks, on corn. Unfair highs at 356 this week. Kind of sitting right up there, not really wanting to come up, but I still think this is a decent opportunity to sell December corn. December wheat. Kind of broke above 415. I was looking at that as resistance, actually. Broke above, closed above, now it's used that as support. So got to watch out on short and December wheat right now. A couple of the recaps. Apple, if you're joining us late. Again, I think you've got a chance for Apple to actually come off back down into 115.66. A little bit more of a riskier trade on Apple. Got to have a little bit of market help, and the market may drag this back up into this 118.08 and maybe a little bit higher before it comes off. Johnson & Johnson. This has been a stock that's been on our short opportunity list, and last week closing below 118.18, going back up into this resistance around 120, 120 and a half, came off pretty nicely. I think you got a stock here that really is turning. Looks like it's printing 116.99 this morning, so down again with the market about unchanged right now. So that's still a really decent short in my book. Home Depot. Talked about this one, just profile appearing above price action on the long term. Don't see a lot of hope for this one. Really looking for this to break profiles again and actually do a flush below 125 on Home Depot. AT&T. You know, a couple of emails about this one. It gotten up into our 39.63. I think this is a great place to play defense on the short side. Above that on AT&T, looking for 38.49 and even lower. Stay tuned for Larry, folks. You'll thoroughly enjoy it.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.